Okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to do some stock analysis on Tilly's stock, ticker symbol TLYS. And that is because this stock is up 174% in the last month, which is crazy. This stock for the past 5 years has been trending down. It used to be a $16 stock and it went all the way down to the dollar range. Now we're sitting at $3.60. The market cap is only $100 million. This is still a very small market cap. And it was kind of it was on the path to where it looked like it was just going out of business. Because if you look at their sales over here, look at the last couple of years. I mean, their sales just these last 5 years it just kept trending down. And now it looks like there's a little bit of growth there. To me, it just looks flat, basically. It just looks like they're not really growing, but not really shrinking. So, I mean, I guess the last 4 quarters you could say have been an improvement, but still nothing crazy to me. But we're going to do some quick analysis here to see why are people so excited about this stock. So, the big catalyst for the stock is that recently they reported their first profitable fourth quarter and full year positive comp sales since 2021. Net income of $2.9 million, dollars, a massive swing from the $13 million loss the previous year, which is definitely a huge improvement, but nothing like insane to where the stock needs to triple. The revenue was up 5% year over year. It's still not a huge growth company or anything. Most notably, management revealed that the February 2026 comp sales surged 20%, suggesting the momentum is not just a holiday fluke, but is accelerating into the new year. Gross margins jumped 720 basis points to 33%. That is super nice. Let's go down here and check the margins real quick just to get a nice visual on that. Gross margins the last 5 years. Again, so I would say over the last 4 quarters, 5 quarters, there is a nice solid improvement there. So that's one thing. Then we have, after closing 17 underperforming stores last year, the company has now recovered its unit economics and plans to open 4 to 6 new stores this year. They are deploying an AI-driven merchandise allocation tool designed to predict exactly which styles will sell in what regions. That's very cool. That could be a huge moat, huge thing for this company that reduces shipping costs and further protecting margins. Sales per square foot ended the year at approximately $260. And what else do we have here? The short squeeze profile, 7.5% of the float is short. That's not great. Days to cover, 16 and a half days. Because the days to cover are so high, short sellers cannot exit their positions quickly without driving the price higher. This has created a trap for the bears that is currently fueling the vertical price action. So again, I mean it's like kind of like an artificial thing. The company is debt free, which is not true. I actually Googled these numbers, and the numbers on Qualtron are accurate. So I think they don't have long-term debt. That's what they mean, but they do have short-term debt. So as you can see here, they're at 46 million in cash and 125 million in debt. Then we go back to management expects. Here's another number that does not line up with Yahoo Finance. Management expects a net loss for this first quarter of the year to be between 34 and 27 cents per share, right? But if you go on Yahoo Finance, they're looking at it as negative 17 cents. Either way, it doesn't really make a difference because it's still negative and it's still a slight negative number. They must hit an 8 to 9% annual comp sales increase just to break even for the year. Blah, 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 blah. So let's go back and look at their numbers here. We have the valuation numbers are definitely important to look at. Here's the last 3 years of price to sales. As you can see, if you bought this stock before March, then yeah, you were getting it at an insanely cheap valuation. But now it just skyrocketed, which is it's funny because it's only at a 0.2, but still it just skyrocketed. So I mean, you could have got the stock cheaper over the last year. So maybe in the past year it would have been a good buy if anybody bought it. But at this point, you're just back to where you were here. And it's, I mean, if things keep trending in the right direction, then sure, maybe the stock keeps going and then, it starts trading at a price to sales of 0.5 or something. But that's all speculation. Again, the numbers to me are not super impressive. I mean, part of that jump is just fueled by the short squeeze. Free cash flow yield the past year, it's finally positive here, even though it's come down now to 3%, which is just average, nothing that good. Price to earnings, they don't have one. Shares outstanding, nothing great. I mean, it's a slight increase, so it's not that great. And then you look at the other numbers here. I mean, it's there's no it's not consistent. I mean, they had a positive quarter of income and free cash flow, but they've had that the past couple years though. So you see, it's nothing that impressive to me. And with the sales looking like this, maybe if it was at least, I don't know, 4 quarters or 6 quarters in a row where it's like consistent growth, then that would be a different story. But to me, I don't see why people would be that excited to get into this stock. So that is pretty much my analysis on this. If you have a different point of view or any other information, please comment down below. Otherwise, I will see you in the next video.